So we just had another big win with one of our clients. We had a client who was getting audited and they were on the hook for about $150,000 in taxes under this audit. However, it came back at no change. They were a short-term rental real estate investor, and here are the biggest takeaways and lessons that we learned under that audit. So the big one is documentation and have your story straight. If you ever get audited by the IRS, you will have to provide time logs, you will have to provide receipts, especially if you are involved in real estate or some type of small business. They're gonna want to know what all of your deductions are, and if you're claiming real estate professional status or maybe short-term rental, you're gonna want your time logs because you're gonna need to show material participation or real estate professional status if that's what they're looking at. So here's the thing, they were working with me all throughout the year, and whenever I work with clients, I prepare them as if they are potentially going to get audited. Just because I deal with so many different clients, the odds are actually stacked against me. So I don't prepare for if, I prepare for when. And I love it whenever a client listens to the advice that I give them, and they took all the advice and soaked it in. They had all their documents prepared, and my clients were very well organized. So whenever the IRS reached out, they got me all of their information and we got it over to them in a timely manner, and we made their job a little bit easier for them. We described everything that we were doing, what each receipt was, what the time logs were, and why we had them in there. We made their job almost too easy for them. And remember, if you are under IRS audit, the burden of proof is actually on you to prove whatever it is that you put on your tax return. So you want to make sure you have all of your documentation in line.